Are we on the brink of a housing market collapse?
Absolutely. Experts like Dowd and Kristina Smallhorn are unpacking what this means for investors right now.
In this video, we have distilled their crucial insights into quick summaries, saving you hours of research.
Stay tuned as we explore the implications of the recent mortgage rate drops and more.
Also, don't miss Emily Brown's take on the United States Mint halting silver sales. Critical information for investors.
Let's dive in to uncover the facts and what they mean for your investments.
Today, we are discussing Jerome Powell's actions and the controversies surrounding him.
It's important to understand how these actions affect investor sentiment and the market.
Jerome Powell's policies may have lasting implications, especially as inflation concerns rise.
Analysts indicate that these decisions could increase market volatility.
What political pressures is Jerome Powell currently facing?
Political pressure on Powell is intensifying, particularly with a demand for more transparency in the Federal Reserve's actions.
How is investor sentiment shifting amid these controversies?
Investors are appearing more cautious, indicating that uncertainty about Powell's leadership could destabilize the market.
What economic forecasts are emerging in light of Powell's actions?
Economic forecasts suggest a potential slowdown if Powell's policies fail to stabilize market conditions.
What predictions do analysts have regarding the market's reaction to Powell's actions?
Analysts foresee mixed outcomes, with possibilities for either stability or severe downturns based on Powell's forthcoming decisions.
In conclusion, navigating uncertainty regarding Jerome Powell will require diligence from investors.
Attentiveness to Federal Reserve communications will aid in making informed decisions.
In this video, we are discussing insights from Stephan regarding the recent drop in mortgage rates.
Graham highlights how this drop could potentially stimulate home buying activity.
Graham notes that lower mortgage rates can lead to more buyers entering the market.
This increase in buyer activity may prompt sellers to reevaluate pricing strategies.
Graham suggests that the recent drop in mortgage rates will drive a significant increase in buyer activity.
We can expect more showings and competitive offers as buyers try to take advantage of lower rates.
Graham discusses how lower rates could potentially stabilize or elevate home prices.
With increased competition among buyers, home prices are likely to adjust accordingly.
What does Graham foresee for the housing market following these reduced mortgage rates?
Graham anticipates stronger competition among buyers, which may lead to an increase in home prices.
Graham concludes that buyers should act quickly to benefit from lower mortgage rates.
Sellers are advised to consider modifying their pricing strategies to align with evolving market conditions driven by buyer interest.
Today, we are reviewing insights from Mike Simonson at Reventure Consulting, focusing on how housing demand has dropped significantly, similar to the situation in 2008.
Mike's analysis reveals that this decline in demand reflects underlying challenges within the housing market that could have extensive effects.
Mike Simonson stresses that the current decline in housing demand is troubling and closely resembles the collapse that occurred back in 2008.
This comparison is vital as it demonstrates how quickly the market can change due to economic challenges.
Mike noted that rising interest rates have severely impacted the purchasing power of homebuyers.
As borrowing costs rise, fewer potential buyers can enter the market, worsening the demand crisis. According to Mike, the increase in unemployment, along with declining GDP, is a concerning sign for the housing market.
These economic indicators highlight the vulnerability of the current market, indicating it could face further downturns. Mike predicts that if the trend continues, we could witness a significant drop in home prices within the next year.
He also foresees a rise in foreclosures, which could further increase market volatility.
Mike's insights encourage potential buyers to thoughtfully consider their choices in the context of the current market.
Investors should review their portfolio strategies to protect against expected market volatility.
Today, we are exploring the world of affordable housing with insights from Kristina Smallhorn, who recently discussed her journey of buying a home for just $20,000.
Kristina's experience illustrates the potential in real estate, especially for informed buyers.
Kristina Smallhorn emphasizes that she acquired her home for $20,000 by leveraging favorable market conditions.
According to Kristina, this opportunity emerged from thorough research and knowledge of the local real estate market.
Kristina notes that recognizing undervalued properties requires comprehensive market research.
Building relationships with local realtors can unlock hidden opportunities for buyers. Kristina emphasizes the importance of due diligence before completing any purchase.
This includes thorough inspections to avoid unexpected issues. Kristina encourages engaging with the community for valuable insights into neighborhood worth.
Such connections can lead to advantageous deals and opportunities.
Looking ahead, Kristina anticipates a rise in affordable housing choices as the economy evolves.
Nevertheless, she cautions that this may also trigger increased buyer competition.
Kristina concludes that home buyers need to stay updated on market trends to seize the best opportunities.
Community engagement and staying informed are vital success strategies in today's housing market.
Today, we are discussing insights from Emily Brown regarding the United States Mint's recent suspension of silver sales.
Emily points out that this decision could significantly impact the silver market due to rising demand.
Emily Brown suggests that the halt in sales reflects broader disruptions in the market.
She adds that ongoing lawsuits related to silver sales could complicate recovery.
These factors raise concerns for investors regarding silver's stability.
Emily warns that the United States Mint's halt could lead to severe shortages, affecting investor confidence.
These shortages could encourage investors to consider alternative options.
What does Emily forecast for silver prices moving forward?
Emily anticipates that silver prices may rise as supply diminishes, leading to a rush among investors.
Legal outcomes regarding silver sales could also dramatically shape market behavior.
Emily advises investors to monitor market trends related to silver closely.
She stresses the need for diversification, including exploring other precious metals.
Investors must stay updated on legal developments that could impact market stability.
Welcome to today's review, featuring insights from Ed Dowd as he discusses economic risks in light of the midterm elections.
Dowd issues a stark warning about current valuations, describing them as kooky and detailing the challenges ahead.
What does Ed Dowd mean when he says valuations are kooky?
Dowd points to a disconnect between market valuations and economic realities, suggesting this could lead to significant weaknesses.
Ed highlights that rising unemployment rates could point towards deeper economic issues.
He mentions that inflation is putting pressure on consumer spending, leading to more cautious financial behavior. Ed anticipates a major market correction driven by increased economic pressures.
He advises investors to remain vigilant as the midterm elections may heighten market fluctuations. What does Ed Dowd forecast regarding the market as midterm elections draw near?
Dowd suggests an imminent downturn and recommends that investors remain cautious given the potential for increased volatility.
In conclusion, Ed Dowd stresses the importance of navigating financial risks carefully.
He underscores that staying attuned to economic signals will be vital for maintaining financial stability as the elections approach.
What a riveting discussion we've just had.
Definitely. Experts like Ed Dowd and Emily Brown have given us a lot to digest about the current economic landscape.
And it's intriguing how they all converge on the idea that market volatility is something we have to closely monitor.
Exactly. But did you catch the differing viewpoints? Ed is warning us about the potential for a downturn, while Graham sees opportunities in lower mortgage rates.
Right. And Kristina's insights into affordable housing add another exciting layer to the discussion.
Plus, Mike pointed out how we could be facing a housing slump similar to 2008.
It's quite the roller coaster of predictions. Viewers, what do you think? These insights can certainly help in navigating the market.
If you found this video enlightening, don't hesitate to hit that like button and subscribe.
Your support means we can continue to bring you these valuable discussions.
Join us next time as we explore topics that matter to your financial future. Trust me, you won't want to miss it.